Hello, everyone. Welcome to People's Notes. My name is Michael Kirkjian, and today is Tuesday, September 6, 2022. In a video today, I'll be looking at what's going on with the Bitcoin and Ethereum markets. Both tokens, I believe, are going to be in a very bearish situation in the next little while. And I will explain to you why I believe that if you're buying Bitcoin or Ethereum in the immediate future, you may be having a negative downturn before things get better over the long run. Before I get started, of course, this is not financial advice. I'm not a financial advisor. I'm a retail investor in this space, and I also do technical analysis for really long term. So I believe long term in these tokens and in my investments. I'm not a day trader. If you're doing day trading or trading for the short term, please look at some other resources that are out there available on YouTube. So let's get started by me sharing with you my computer screen and telling you exactly why I believe that we're kind of in this bearish environment. So the first thing I'd like to do is show you what I'm seeing right now as far as what's going on with the interest rates. The interest rate market is really important, I believe, because it does dictate trends that are going on in the environment that we're seeing all around us. So right now, if you look at the 10-year and 2-year spread, the source for my chart is CNBC. So we see that since July of this year, the 10-year and 2-year spreads have reversed, meaning that the bonds that are for the 10 years have interest rates that are going to be less than the 2-year bonds. This is obviously a very negative environment. Then people or investors would be buying short-term bonds, and instead of investing in the stock market or buying risk-on assets like Bitcoin or Ethereum, they'd be better off buying short-term bonds because their rates are actually better than 10-year bonds. So this obviously right off the bat is already a pretty negative start. And the research, if you look at in the past, different economists say different things, but for example, Raoul Pal is one of the investors, economists, or really great investors that I follow with the Real Vision. He also mentions that whenever you see this this spread kind of inverting like this, it's kind of an indication that a recession is coming. So if I look at what is going on with these the actual liquidity as well, with especially specifically with the Federal Reserve, we see that the Federal Reserve, obviously, if you look at the last, let's say, 10 years, liquidity seems to have been going higher and higher from, let's say, 2013 until 2014. Then there was this gradual shrinking of the liquidity, but it didn't really make a difference. I mean, really, we lived a very good market in the last 10 years, and it was really a bull market if you look at the Nasdaq and the S&P. And all of a sudden, we had the pandemic in 2020. Then the liquidity went up, shot up tremendously. It went from $4 trillion all the way up to $7 trillion, so it almost doubled. Eventually, we got past 8 trillion, all the way up to close to 9 trillion. And now if you look at what's going on, let's say the last 6 months, we see that the liquidity on the Federal Reserve, they are really tightening. So meaning that if they're tightening, and at the same time, they're also increasing the Fed funds rate, if you look at, let's say, last year, for example. So obviously, these are two very negative environments for risk on assets, specifically stocks in the Nasdaq, and also especially the crypto space. Now, how does this relate with other stuff? At the same time, we're seeing this DXY, which is also an indicator that I really follow, which is the US dollar currency versus 6 other currencies. So we see that right now it's had a massive bull run over the last 12 months. It went from 90 points all the way up to 110. So obviously, by it going up this much, it means that the US dollar has gained so much versus other currencies like the euro, Canadian dollar, the British pound, and so forth. Percentage-wise, this has been a 22% increase for the US dollar. This is obviously a very negative sign. What this means is if people are buying the US dollar, it means that they are hedging against the liquidity issues, they're hedging against uncertainty and hedging against issues, which does make sense as we're living in this pandemic environment, and also, of course, this year where we saw the war happening in Europe. So US dollar going up like this, specifically the DXY, if you go back in time, how this happened last time? Well, in the 1980s, when we saw this again, early 80s, all of a sudden the US dollar had this massive strength going on with versus other currencies. And then the same thing happened also, of course, in 99 until 2000, 2001, where we saw the US dollar gaining so much versus other currencies. And now we're living the exact same thing, although not as as steep as numbers as we saw back then, because back then in 2000 the DXY had got up to around 120, and back in the early mid 80s the DXY had got to above 160. So it means that this time around it doesn't seem to be as catastrophic, but obviously this is still levels that we have not seen, especially all those who have been in the crypto space. Bitcoin started trading in 2009, 2010. It means that Bitcoin has never lived through such a strong DXY, because really if you go back to 2009, 2010, where the DXY was something in the range of around 76, 77, and then it had never gone higher than really 103, 104, and which happened basically in 2017. And now we are basically above this. So meaning that whoever's in the crypto space, whoever they are, they've never really witnessed this kind of environment. So we're all seeing this at the same time for the crypto space with such a strong US dollar. At the same time, if I look at what's going on really with the actual stock market, the Nasdaq, if you look at it here, we see that the Nasdaq is clearly in a negative trend. We're kind of going through this bearish corridor, and I like Francis Sant, who is the crypto sniper. He's a great economist, a technical analyst, and he tends to say that he kind of pays attention to the trend quite a bit, and he likes looking at the trend. If the trend's going downwards, then he basically wouldn't want to bet too much against it until there's a reversal. So if you look at this trend right now, we are seeing clearly that the reversal hasn't happened yet. And if I zoom in, we see that the Nasdaq is in this really negative pattern, going downwards. And if I look at the exact same thing with what's going on with the actual S&P as well, we can observe that S&P as well, similar to the Nasdaq, which kind of makes sense because, of course, the S&P really is the broader market. The Nasdaq is the technology market. But really, if you look at the S&P, even though it seems to be on a secular good environment, I mean, if you look at really the S&P, we do notice that really after 2013, when it kind of broke from this bear market, from 2000 onwards, the S&P was in a secular uptrend. But if you look at what's going on with the actual current market, in this current market, the S&P really similar to the Nasdaq is in this negative environment, and it's kind of going lower and lower. So meaning that the way the pattern is going is that it seems to be a negative pattern. And I will really try to catch this. If it does break this, that way I'll be sharing it with you on this channel. And if I look at what's going on with, obviously, the two tokens that we're looking at, very specifically Bitcoin and the Ethereum. Bitcoin, very similar, right, to the S&P and the Nasdaq, is in this negative corridor. And right now, more specifically, what has got me a bit concerned with Bitcoin is that really we are below this 200-week moving average. So nothing good ever happens if we break this 200-week moving average. And honestly, I don't think we have really seen this in recent years, because even in 2018, which was a really disastrous market for Bitcoin, when it went down from December 2017 until November 2018, Bitcoin had a massive drop where it dropped something in the range of 80%. It never really went below this 200-week moving average. The same thing happened also in 2020, March 2020, where there was this kind of a short-lived drop below the 200-week moving average, when Bitcoin went below it really for from March until sometime in the range of maybe a couple of weeks in March, and then it would bounce right back up. But right now, what we're seeing is that Bitcoin really broke this 200-week moving average over here in June of this year, and then it tried to break away from it. It didn't, and now we're seeing that all of a sudden we are really continuing this downtrend. So obviously, for those who are speculating in the space or investing in the space, buying in the space, watch out, because over the next little while, it looks like we are still in this very negative bearish environment. And Ethereum is very similar as well. I'll share with you my Ethereum chart as well. Ethereum, the way I'm seeing it, obviously, technical analysis, you can see it different ways, depending on different ways you see it. But I do see that it kind of broke downwards this negative, this triangle, and it should have really, Ethereum should have gone lower But what happened was, obviously, there's a lot of fundamental things going on in the background with the merge and so forth. So it looks like there was this buying pressure that made Ethereum have a kind of this bull run that we saw since June of this year. So it's been last like 2.5 months. But it looks like it had this hit this massive resistance with this negative triangle pattern. And it looks like we are getting ready to potentially go lower. So I'll pay close attention to this, see how this plays out. But all in all, to summarize, this isn't a doom and gloom video. I don't want to be really saying that things are really bad or awful and so forth. But if we are speculating, or if we are investing or buying in this asset class, important to note that the macro environment all around us is kind of negative. So whatever you're doing, make sure that you're doing for the long term, and don't risk more than you can basically digest, because obviously the last thing any of us wants to do is invest money or buy an investment and also see it drop tremendously. So let's pay attention to all this. Thank you so much for watching, everyone. If you like this kind of content, please subscribe to my channel, and I look forward to sharing with you more videos in the next couple of days, couple of weeks. Thanks so much for watching. Bye-bye.